What's up, YouTube? It's Joe Ketchapalia sitting on the couch, making some money, investing in fractional real estate online, as usual. We're getting close to the end of the year. I thought it would make sense to give a little recap about my fractional real estate portfolio, talk about all the sites that I am currently investing on, what I'm doing, but also share a little bit about my thoughts for the future, on these platforms. Am I going to put more money on? Am I planning to take money off? If you've been watching my videos regularly, you probably would be able to guess 90% of what my plans are and what sites I like and which ones I don't. But I know a lot of you just are casual watchers, watch a video here and there, maybe only watch about one platform or another. This is a time I'm going to sort of just give a little bit of a description of each platform, what I like about it, maybe what I don't. Sometimes what I don't like about it might take too much time to discuss, and so we'll give you the highlights. And then, that's all. That's the plan for today. I think that I'm still very excited about fractional real estate investing. Unfortunately, I've been very disappointed by a lot of the platforms. Not all of them. These platforms, I'm not going in any particular order. I guess the earlier ones are the ones that I have more money on, and those are just the ones that I had opened up first. But I'm gonna go through. It doesn't, remember, none of this is ever an endorsement of any platform. You want to do your own due diligence on every platform and every property that you see me buy. Just because I buy something doesn't mean that you should. I will include links in the description of this video to all the places where I currently invest in fractional real estate online. Some of those will be referral links where maybe you'll get some money, maybe I'll get some money. It'll be different depending on which platform it is. And some of them will just be a link to the site itself because either their referral program is terrible, or they don't have one, or I've chosen not to participate in it for some reason. Okay, so starting off, Solslot. This is a platform where you're buying a piece of a digital assignment. Is it a digital assignment contract? Yeah, I think it's a digital assignment contract. You're getting these DACs. It is, essentially you're getting the opportunity to participate in a flip of a property most of the time. This one is one where actually you're buying, they're renovating it, and then they're going to refinance on the exit. But you can see I currently own pieces of 4 different properties. These are all different stages. I wonder if I use this redeemed. I haven't looked at this and refresh. I don't think that I can see the ones because this is a newer feature, this account dashboard. But I believe that I've cashed out of 4 or 5 of these already. So those are ones that have gone full cycle. You can see I don't have a ton of money on here. That's going to be the case with just about all of these sites. I am very much just trying to experiment, figure out what I like, what I don't like. Solslot in general, I like the site a lot. It is, they have a lot to work on as far as they've had little issues. Although right now they seem to be working fine. But they have, they're still somewhat early. I have bought a piece of, I think, every single property that they've put out since I started. I've done well on most of them. I want to say this white block, one of these 2 has been sitting for quite a while. But as long as they sell in any reasonable period of time, I'm going to be very happy with the returns. This is a platform where I just see it as long as I do my due diligence on each property and I'm happy with it. I'm not being too selective across different properties because I think that, one, they're all short-term holds. They're not being used as investment properties. So I'm really just looking at the valuation and, okay, what do I think? Do I think it's reasonable that we're going to sell this in a short period of time? And so what I'm really hoping is that they just start to build some volume on here, because that's what I would need for this platform to really work well, right? I mean, I'd like to be invested in, have small pieces of hundreds of homes that are turning over every year. And I think they could get there. I think there's the demand. I'm not sure that's the direction they're currently going, but that's Solslot. Like this one a lot. I think there's a lot of potential. And I do want to mention they're doing this other thing, and I actually closed the thing up here, but where they're doing that membership in the Kanye West property, or former Kanye West property. So, I don't know if maybe he's a little distracted, the founder of Solslot, and we're not getting, that's why we haven't seen any new DAX as far as, sort of these bread and butter deals. I'm hoping we get a whole bunch more of these in the future that I can invest in, because I like those a lot. The next platform is Mogul. If you watch my channel at all, you hear me talk about them a lot. They are still my favorite platform, but I've passed on a lot of their recent deals. You can see I own pieces of 14 properties with them. I do have some cash just sitting in my account because I had a 16, I said 14, 15. I own pieces of 15 properties. I had a 16th, but that one canceled, which is why now I only have 15. So I've got some cash sitting there for the next one, but I've just passed on the last bunch of them. Just for a number of different reasons. I've been being pretty picky. I already have quite a few to be able to judge how things go. I am trying to go slow because next year they're going to open their secondary market, and until we really see how that plays out, we've seen the secondary markets sort of ruin the investor experience for some other platforms. I think that the Mogul guys have approached everything that they've done so far in a pretty intelligent manner. So I'm hoping that when we see their secondary market, that we're not going to see the same issue here. But you never know. They are, the reason they're one of my favorites is they're just selecting properties that have strong cash on cash returns. So if we end up just holding these properties for a long period of time, I think I can't really go wrong with it. So I don't have a lot else to say about that. And this is one where you're actually just investing in a piece of, it's an investment property. Everything I've bought on here is either a short-term rental or a pad split. And I'm buying very small pieces of these. I mean, they're like, do they tell me the percent owned? Yeah, like almost 1% is my biggest one. I think that 1.3, 1.24. But so, okay, and 1% of the Swift. So very small percentage of all of these, right? And so I'm trying to get pretty wide diversification, but over time I've decided to put a little bit more into each one, because I don't want to have a situation where I have 1,000 tax forms, right? I'd rather just have, 20, 25, 50. I mean, over time, as I build up a portfolio, it might be a lot more. What I'm really hoping is when the secondary market opens, I'll be able to buy more of the ones I've been happy with and maybe get rid of some of the ones that I don't. And so continually balance my portfolio geographically and everything. We'll see how much, how that plays out and if that really works out or not. The next one is Groundfloor. This is the site where you're buying a piece of a mortgage. They're fix and flip loans typically, or new construction loans. You're buying, they're 18 months or less. They're relatively high interest rates. I've had just, let's see, how many have I gone through that have closed? So 178 total that have gone full cycle since I've bought them, or since I started investing on here. Some of those were these artificial early payoffs, but the actual rate of return on those, have been between an 11.34 and 11.4 average. I don't know why they don't give me like a total overall average. I think they do on the summary page or anything. And I still have 119 loans open with them. This is one you can see I took a big chunk of money off, or not, not a ton of money, but a big chunk relative to how much I had on here, about a third of the capital. That's just, they kind of forced me to. They had this big bulk payoff of the LROs to move them to another product, and they didn't have anything that I wanted to invest in. They were like, oh, well, you can move it to the Flywheel portfolio, but I have no interest in that product. I always want to be able to buy individual assets, not trying to buy a pool of assets and pay fees for someone to do that for me. But anyway, it's been all right since then. I think that if I'm almost at a point where 100% of my cash is reinvested, and if I do get to that point, then I'll start to add some back on. I'm going to be a little bit more cautious this time around, because I don't want to be in a spot where they just make me take a third of the cash off if and I've put a ton of cash on here, right? If I've done that, then I have to figure out where to put it. So, and this is one of the reasons why I'm going slow with all of these sites. I don't have a huge portion of my net worth on any of them, because it is just an experiment. I'm really trying to figure out, which ones are good, which ones aren't, where the opportunities are, how to use them, and just give them some time to actually show what their track record is. Speaking of track records, Lofty is the one that I've been investing on the longest. It's also the one that I have the most capital on. I had more than this. I took about a third off earlier this year. It's a really, if you've watched my videos, I have very mixed feelings about Lofty. There are some, what I believe to be incredible deals. Again, do your own due diligence. Also, if you haven't already, please like and subscribe. And in the description of this video, I've got a link set up to a Discord where there are about 200 of us talk about all different fractional real estate investing sites on a regular basis. There's a lot of discussion on Lofty in there, but plenty of others as well. So please feel free to join that. And let me know what you think about any of these. But so yeah, this is one I find very deep discounts to what I think the real world asset values are. My goal on most of these is to accumulate tokens and then sell the properties in real life. I've had quite a bit of success doing that on a small basis, right? I think my total profit on Lofty is somewhere around $7,000, $7,500, but relative to the amount I've invested on it in that time I've been on there, it's actually a pretty good return. But I think it comes with a ton of risk, most of which is not obvious on the surface. Like if I just open their site, if I click on a property, if I'm new to the platform, I don't understand how things work. There's just all kinds of hidden risks that aren't obvious on the front end. And if you're not in the Discord regularly, if you're not talking to other people who are on here, when I say the Discord, I mean Lofty's Discord. They have a channel set up for each individual property. And so if you're not looking at those and you're just picking properties based on the property page, and not digging into the documents and not looking on third-party sources, I think, the potential to lose money, it's almost guaranteed if that's the way that you're investing on here. Now, maybe because we're at a point in time where token prices are extremely depressed, maybe the bias should be on the upside now, right? Maybe we have a better chance of making money than losing. But even still, there's always the potential for new lows. I do have a few properties on here that I think of as long-term holds, but almost all of what I've bought, it's because of a discount to the real world value, which it's not a great sign for the platform, right? If the reason that investors are attracted to here is because once you move a property onto the platform, the ownership interests go down in value, so people can buy them to then take it off the platform and make some money. That's one of the big reasons that I'm worried about the platform, right? Like if there's not a better use case, if there's not a situation where you can actually make money just buying and holding on the platform, for the long run, it's tough to see how they continue to attract people to bring properties on there, how they continue to attract investors and whatnot. So that's my worry there. In addition to just investing in property tokens on there, I also am using their staking, which is where you can either lend cash or then it's actually USDC, not real cash, which is, I guess, a stable coin. I don't know. You guys know I'm not a crypto guy, but that's, I've turned the cash into USDC and can lend it into these liquidity pools. You can also lend your property tokens into the liquidity pools. I have some of both. I've done all right with some of this. It's definitely something that I would probably not get into. If I had understood exactly how they worked, I probably would have never even bothered putting USDC on any of them. Maybe I'd lend some tokens on the properties that I plan to hold for the very long term. But in general, I haven't had a great experience with these liquidity pools. So we'll see. But it is, it's kind of separate from the Lofty, strict property investing. This is probably the thing I talk about the least, and it's because I'm not, I'm definitely not an expert in it. It's where my real estate experience and knowledge is the least helpful. But I think that to a certain extent, maybe picking proper, which pools to stake in and which tokens that I want to lend there versus ones that I don't, it might be helping me a little bit there. But overall, I mean, this is just, I like fractional real estate investing because I think I'm an advantaged investor there, right? Like I have the ability to pick better deals than the average person investing on there, because a lot of people are just, looking at some pictures, decide I like this and buy it. And it's, I don't think I have that same kind of advantage when I'm investing in the stock market or in crypto. But because I really understand real estate as an asset, I know how to dig into markets, how to look at all sorts of different things and do due diligence, which is what the videos are usually about. I think I can reasonably expect to get a better than average return by investing in fractional real estate. I don't necessarily think that's true when I'm investing in these pools, and so probably should just get out. But a lot of time, I have a lot of tokens trapped in these pools at this point. And so, some of it's still in there intentionally, but the bigger ones, it's because if I took it all out, I'd end up leaving 2 or 3 tokens in there. I don't like that at all. But that's Lofty. If you want to hear me complain about them, you can see a ton of other videos. As a reminder, I'm giving you a recap about each platform, but I'm going to let you know at the end, what I think I'm planning, where I think I'm planning to do overall with my portfolio in the future. So I'm going to get to that with Lofty, just like all the rest of them. Collab Homes. I haven't talked about this one in a long time. I just own one property on here. So far, I've had a 5.76% return, which is really kind of in line with what I should expect, because it was, they told me 7.5%. I haven't gotten the fourth quarter distribution yet, so it seems like we're kind of in line. My first distribution was smaller than I expected, but the more I understand this, I think it was just because of the timing of when I purchased. I don't know that for sure. I've talked in the past about how their statements made it really hard to understand where the profit was coming from, because we had negative, our NOI minus our debt service was a negative. That's not the case anymore, right? This most recent statement, there was a strong return. I don't understand why they're still not collecting this collab fee. But if this keeps going the way it's going, I might buy a little bit more of it. They haven't been great about answering my questions about stuff. I've joined I joined one of their webinars one time, and they just really couldn't answer what I thought were sort of basic questions about properties. Their Discord, they're not very responsive in. So overall, I'm still not super excited about their platform, and their stated returns are all relatively low. Like that one, their yield is supposed to be 7.5%, and it is the strongest yield on their platform, I think. This was another one that I looked into buying some of, but couldn't get the questions that I had answered, and so just ended up eventually giving up on it. But you can see most of them are 6%, 5.5%, 4.5%. And so, but then they're always saying, okay, but like a mid-teens total return. So they're really they're hoping that they hit their appreciation appreciation target to get to these higher IRRs. That's just not what I'm investing in fractional real estate for. You could say, well, wait a minute, on Lofty, I'm getting no return on a lot of properties, right? I'm not buying that hoping the price goes up, the value goes up in the future. I'm buying it understanding I'm buying it at lower than the current price should be today, right? So that property, if we sold it today, where that value is, I'm not betting on appreciation. I am buying a discount on Lofty. And so that's the difference, because, I think some people have been confused on that, because I'm saying, okay, on this platform, I'm not willing to bet that more than half of my return comes from the sale. On Lofty, I am willing to bet most of my return comes from the sale. But the big difference is it's not because here it only works if the property goes up in value. On Lofty, the properties don't have to go up in value. The token prices are low relative to the real world sale value. Again, just my opinion, not accurate in every case. I did do a video maybe last week about one that I lost money on. So my hit rate is not 100%. But in general, I think it's relatively easy to figure out, okay, do we have some value here relative to the current token price? Okay, let's see. Arrived Homes, I have very little money on here. If you'll remember, I had to buy at least one property in order to get access to their secondary market. I don't like the returns that they have on their primary market, right? Usually the stated yields are very low for the type of investing that I like to do, right? I like to get a higher yield. But their secondary market, because you can buy at a discount, I've started to see, I think that there's the opportunity to get those better yields, or at least get better total returns when you combine a slightly better yield from the discount plus the equity, the ability to make money on the equity side because you're buying at a discount. And so, I've bought one on their secondary market. Every time their secondary market comes up, I expect to be able to pick up a little bit more. But that's it for Arrived, right? And Arrived is, I think, sort of the standard that most people think of when they think of fractional real estate investing. This is, and I don't think I did a good job explaining what Collab is, but Collab is all student housing. And it is, they are buying the property, moving it into an entity, creating securities, registering those securities with the SEC, and then selling them through a broker dealer. Arrived is doing the same thing, just with single family homes, sometimes long-term rentals, sometimes short-term rentals. I think of Arrived as sort of the standard in that business model, right? We see them do this on a bigger scale than any of the other platforms. Part of the reason why I wanted to invest in there. And then the other is I do think over time we'll see more and more discounts on their secondary market. And so I will start to add some more of their stuff as that comes up. Look at this. ARK7 always locks me out. I don't have a closed purchase on here. I put in an order tonight that I expect to go through. But one of the things, so I've talked about ARK7 quite a bit. They're very similar to an Arrived Homes. They've had their secondary market just sitting open for a long time. But in general, there's been very little discounts. Recently, we've seen more and more to where, some of these ones were originally listed for sale for $100. Now they're down to 85. I think that when you look at the total market cap for these, they're starting to get in line with actual property values, which most of them at their initial offering are a significant premium to the property values because of all the expense built into this type of model. And so I'm going to start shopping here a little bit more often, and will be hopefully picking up more that are discounted. I know we have a couple of people that are already invested in ARK7. Again, their yields are just very low for what I'm hoping for. Like if you think about, my average yield on Mogul, even with a big chunk of my money in one non-performing property, my average yield, non-performing is not really the right way to say it because it's just had a couple bad months. It was performing initially, and I think it still will. It's a short-term rental, but my average yield on that platform is over 9%. And, if you just looked at my pad splits, which would be another thing that some people are just buying the pad splits on there, my average yield is like around 11, right? Where here you're seeing their stated yields are, 5%. I don't think they have anything over 6, right? So they're very low yields. You're just really focused on getting a return from market appreciation. You also, on these ones where they are securities, I'm not here to give you tax advice, but I would look into it because I don't think you get the same beneficial tax treatment that you do in some of the other ones where it's more of a direct ownership in the property. But, when I can start to, okay, I've got a low dividend yield, but it is providing a yield, and I'm starting to get a discount to where I'm buying the property, buying the shares at a price, where you multiply that price by the shares outstanding, so the market cap of those are below what I believe the real world value of the asset is, okay, then that starts to get exciting for me, right? And so I've seen that a little bit. I've really only pulled the trigger on one so far. I'm hoping to pick up more and more, but I just wanted to go through, close that purchase, see how it looks. Again, not super excited, but it's a good trend, right? Because initially you hardly saw any discounts at all, and now we're starting to see more and more every time I look on here, and starting to see where some of them are significant enough that I think it's worth, starting to take a chance on them. And then the only other one that I have a little bit of money on, hopefully you can't see that, is I did put $100 on Real Bricks. If you've watched my videos, I've been very critical of them. That hasn't changed. One of the things when I first bought it on Collab, I did this for the same reason. I really wanted to see if I got access to some additional information once I'm in here and invested. It doesn't really seem like I did. I did use the ORAT referral code, which it's just ORAAT50. If you use that referral code, that's the one that's on the ORAT channel. That's where, if you've followed me, you've probably seen me talk with people from there quite a bit. But anyway, they had a referral code. I used it, so I should get $50 in free shares in addition to the $100 that I bought. So with that, it seems really hard to get hurt on my first $100 investment that way. Again, my issue with this platform is it doesn't seem like, if you do the math on the rent and the cost of operations and the price, that they could actually pay out this yield on any sort of consistent basis. And I figured, hey, why not just buy some of one and see if that's really true, right? Just test that. I only did it with $100 because I feel pretty strongly that they're just not going to perform the way that they've said long term. But it's perfectly possible that I'm missing something about it. One of the reasons I haven't generated a referral code for them, and something I think is like, just I don't know, I don't like that they're doing it. I understand if you sign up for their referral program, you have to agree to only share their link, not any other platforms. I think they're doing a good job marketing. I see their ads everywhere. I think they seem to be doing a much better job with that than they are of picking properties that I think I'm going to make money with. But anyway, I did sign up. I used the referral code. So I don't think I can get hurt with that initial investment, right? Obviously, beyond that, I'm probably not putting more money in here, but I will give you updates along the way. As far as, how it's going for me, because they're just everywhere. Their ads are everywhere. I thought I might as well just own a piece of one, so I can not just be sitting here giving you my opinion about it without, some tiny piece of skin in the game, which now I have. Okay, so that's all the ones that I'm invested on. What's the plan for the future, right? That's where things stand. I'm definitely going to continue to invest on Mogul. Provided that deals come out that I'm excited about, right? I have passed on a bunch of deals, but I think that I'm sure there'll be ones, and that's why I just left that money on that platform. I'm sure there'll be one sometime in the future that I want to buy. Again, especially once the secondary market opens, I'm definitely going to buy more of some of the ones that I have if other people are selling, because there's some that I have on there that are just fantastic, and hopefully I can buy some from somebody. So plan to continue on there. Solslot, all of the deals that are their original model, I plan to continue to, do due diligence on each one and buy more. I'm not really interested in that other membership thing that they're doing. It's just not a good fit for me, right? It's not. I'm sure there's somebody that's interested in it, but that's not me. It's not. To me, it's not pure real estate investing, right? It's you're investing in some sort of business, or I'm not even exactly sure how to classify it, but hopefully they get a lot more bread and butter deals, and I will keep investing there. Groundfloor, I kind of already mentioned, but gonna just keep putting a little bit of money in every single one of those deals, and as long as they don't force pay off some, I will start to slowly add some capital back on there. Lofty is the toughest one for me. I see these just really deep discounts, and I'm tempted to put a lot of money on that platform. So far, I still haven't been. I did put a tiny bit more back on, but nowhere near as much as I took off. When I see the real deep discounts, it makes me want to put like 10 times as much money on and just go all out and buy stuff. But I just don't trust the operations of the platform. I don't trust the long-term viability of it with their current business model. It's very difficult to understand, where things are headed on that platform. Because if you can't, if they can't like figure out a viable model where somebody can bring a property to the site, sell equity in their property, they're happy with the amount they can sell, how fast it sells out, and the price that they get, but also the investors at that price are happy with the investment, are making plenty of money, and in the future are able to sell it for more, not less. Until they figure that out, it's really hard to see the platform moving forward. And so, when my biggest opportunity, and I think the biggest opportunity on the platform for a while, is to buy something on the platform and then to sell it in real life, it's hard to want to put a whole bunch of money to work doing that. I will probably continue, but I don't think I'm gonna. I don't know. I mean, every once in a while, I'm just tempted to do enough to just like really control some of the properties. They have talked about making it so you can buy larger percentages of each deal, which might make it a little bit more interesting, because then, okay, if I think that I'm getting a big discount and it's worth my time to actually get involved because I can buy 30% or 50% of some of them, because I think my biggest stake right now is like 12.5% or almost, close to 13% in a property. I owned more dollars worth of other properties, one that sold, the Odom one, but I think, I think my biggest cash position in any of these might be, like, $5,000 or $6,000. It's not enough money to jump in here and try to like control the outcome. I put up votes, I talk to the property managers, I do a little bit, and I'm almost maxed out, but more than anything, the slippage keeps me from buying a whole bunch more. But it's a situation where, maybe, I think they could change like 17 things, maybe 20 things about the way they do business, about the way they respond to clients, about the way they provide due diligence. Like, there's a lot of small changes that if they made all of them, what their standard operating agreement look like, the way that they, actually, if they actually had title insurance when they purchased these properties, like all these different things, if they could make it a more secure and safe platform, there's just so much potential. But again, it just comes from the current discounts, which those discounts come from somebody losing money by selling it at that price, right? So I go back and forth so much, and if you've watched my videos, you know this, so I'm going to stop talking about it, but not really sure what the future of Lofty is for me. Probably a lot more of reluctant investing, lots of complaining videos, probably still continue to make money. And so, it's going to keep me hooked. And I think that that's the sort of the boat that a lot of people are in. Like there seem to be tons of us that are very fed up with the systems and processes that they have, but just still see the potential to be able to, for example, buy this property at 50% of what it was selling for 6 months ago, and nothing. Well, I guess that's not a good example because there's been quite a bit of change on that one. But this one, right, really nothing bad has happened that should bring the price down to 26 from 50. Although I thought 50 might be too high initially based on the info that I had on it. But you can see, over and over again, you just have deep discounts from where they were originally brought to the platform. And so, this one, my cost basis being less than $10 when tokens were originally 50, $26 tokens were originally, like, there's that opportunity, but it is only exists because people lost money. Okay, enough of that. So obviously, I think I'm just going to keep muddling along with Lofty. Collab, if I might end up putting a little bit more money on here, I might buy a little bit more of this mine property because it does now start to seem like it's making money in a way that makes sense to me. And if so, I don't know, maybe that gets me to then push and try to get some answers to questions about Panoramic Way, and then maybe I buy a little bit more of that. Still not super excited about this platform just because they don't seem great at answering, what I think are relatively simple questions about the properties. Maybe I've just never got to actually talk to the right people there, right? Maybe their customer service people are just not really, they're just like, oh, let me tell you how easy it is to click buy shares and go through that. Like, they're not like, ask a due diligence type question about the property and you get like, a deer in the headlight like stare and not a real response. And so it's tough, but if it does just keep chugging along, I think there's no reason not to buy a little more, except that it is a little worrisome how slowly some are selling out. And if they're not able to sell out, do these companies continue to exist if they can't? Oh, well, some of these are just, these are not, these are all notify me. And I don't know the answer to that, right? And so that's one of the risks that we have on all these platforms is just this platform risk. Arrived, as I mentioned, I'm going to keep looking for deals on their secondary market every time it opens up. They're the ones that open for limited times. I think that that's going to be the way to make money on there. I think they're probably, in my mind, and it's what they try to sell on being like one of the most safe and secure platforms. Have some big, deep pockets backing them and raised a lot of money to do things. So I think as long as I can find deals, I think they have one of the sites that are most likely to survive going forward. Obviously, I think Mogul is going to. I think Groundfloor will. Obviously, these are my guesses. I don't know for sure. But Arrived seems to be, one of the more established ones. And so from that point of view, as long as I can find deals that are discounts and make sense, I'm going to keep picking those up or, start doing more because obviously I haven't very much yet. This last cycle of secondary market is the first time that I actually got one and went through the process. And so now I'm just going to have to be a little bit more prepared and have dug into properties before the next time. As I mentioned, ARK7, I'm going to now be a little bit more diligent about looking for these discounts because maybe just put some bids up that are nice and low as well, because over time, I think if there's continued pressure to the downside, as long as I think the asset value is there and there's some yield, if I'm getting a real discount to their, I don't see, I think this is one that I'll start to accumulate more. Now, does this platform end up going the way of Lofty? I think it's less likely. It isn't so decentralized. It isn't, it's not full of all these scams or whatnot. Although, the same could have been said for Landa. I don't know if you're not familiar with Landa, Google it. It's a platform I did a video on it as well. I put a couple of videos actually. I put money on, took it off almost immediately. A lot of people have had money trapped on there for a long time. That money's probably gone, or at least a good portion of it. And that was run in a model very similar to ARK7 or Arrived or Real Bricks. The centralization doesn't necessarily create safety for you, right? You actually have to have like good operations, good property picking. I don't necessarily think that we have that here. But if I'm getting, I think they're doing okay. And if coupled with that, I can get good discounts. To me, I think the risk-adjusted return there makes sense, right? If I think I'm going to be able to get really outsized returns on top of, in a scenario where, maybe there's a little bit more risk because they're just not picking the best deals. Although I like the markets I like the ARK7 markets a lot in general. I think they're picking much better markets than most of the Lofty properties are in. So they have that going for them. I mean, I guess they have a little bit of overlap with Chicago, but in general, there's very little overlap. Real Bricks, I don't think I'm going to put any more money on, but who knows? If this first one, if it goes and they start to put out better deals, that could change. But so that's my plan for all the ones that I know of. I'm going to keep looking for more, right? And if you're aware of other platforms that have, or fractional real estate platforms, I'm going to keep covering all the ones that I find, sharing my thoughts on them. And then one of the things that I think I'm going to do a little bit more is try to be a little more willing to experiment with ones, even if it doesn't seem like it's a good moneymaker, right? Instead of putting, 5 or 10 or 15,000, I might just put a couple hundred like I did, on ARK7 or Real Bricks or Arrive, right? Like I have tiny amounts of money in those. But, part of what I'm trying to do is just cover the industry really. Obviously if any of those start to really make a lot more sense, I'll dump a lot of money into them. But if not, I want to at least, keep my finger on the pulse of the industry. And I think it's tough to do that without having at least a little skin in the game on some of the platforms. Because I mean, even like Collab, where I do own a little bit of one, I hardly ever check in on this, right? Until I get my little email that, hey, I made $1.88 or whatever it is that they're sending me each month. So yeah, I'm going to try to do that. Try to put a little bit more on more sites that I can, if I can find them. So please do keep sending them my way when they come up. If you think that I'm missing some, or I've passed on some, or that I'm missing the opportunities on some of these platforms, please let me know. I am super curious. If you think that some of the platforms I'm on are I just am making a big mistake, let me know that too. I know a lot of you tell me on a regular basis that I'm crazy for still having money on Lofty. Part of it is some of that's stuck, right? Like I'm guaranteed a loss if I just try to sell out today. But a lot of it is I just am making money, so I continue to do it. Anyway, I think that's it. We haven't had a long rambling video from me in a while, so I know some of you probably missed that. There you go. That's it for tonight. Until next time, I'm going to just keep making mistakes so that you don't have to.